Hi there, I'm Champion Trader Kevin Davey, and here's an algo that you can use in your own trading. So let's get started. Today, I'm going to give you an algo that works in the current market on some different instruments, some different bar sizes. And you might say, well, hey, why should I listen to you? You probably already know about my trading success in a verified trading contest, but you might not know I've also written 5 best-selling books on trading. They're shown here. If you're interested, go to Amazon and you can read more information about them. Okay, let's jump into it. So first, I'm just going to give you a simple description of this algo. It's a real simple moving average crossover type system, but it has a little twist to it. And it only has a profit target. I know this will scare a lot of people who like stops and like stop losses, but I build quite a few systems that don't have stop losses in them. And usually the performance over time is better. It's a little scary not having a stop in the market, but a lot of times, if you build the strategy correctly, you don't necessarily need it. It's something you have to test. But this one only has a profit target. It's based on entry number 13 that you can find in my Confessions of an Expert Champion Trader. I didn't give you the right title. It's Confessions of a Champion Trader. Sometimes I forget my own book titles. I encourage you to check that out. So the rules, I'll just kind of describe them in plain English. So first, what you're going to do is you're going to calculate a fast moving average and a slow moving average. And then if the moving average crosses above the slow one, if the fast one crosses above the slow, and the close is less than the previous low, that's kind of a momentum type little add-on, then you're going to buy. And vice versa for selling short. The profit target, you're going to have a set dollar amount per contract. This would be for futures. And that's it. Those are all the rules. So if you look at the TradeStation code, again, if you don't know TradeStation, you should be able to read along and kind of figure out what's going on. You'll see I have my inputs. Then I have my rules, which says if the average close of a certain length crosses above the average close of a different length, and the close is less than the previous low, buy next market. Basically the same exact thing for selling short. And then down at the bottom I have a profit target that is set to a certain dollar amount. So that's it. That's the whole strategy. As far as optimizing and iterating, I have 3 inputs that I'm going to optimize, and you can see the values that I'm using there and see their steps. Altogether, it's only 36 iterations, so it's not a lot of optimization, but it's a little bit. Why do you do this? Well, what I've found is if you do a small amount of optimization, you can actually check the robustness of a strategy. That's really a key. So this strategy might work with a look back length of 10, but if it doesn't work with 5 or 15 or 20, if it only works with 10, it's not a very robust strategy, and it's probably not something you're going to want to trade. So I'm looking for robustness here, and I do it during a 2-year test. Here are some results, and here are some of the markets and bar sizes where this particular strategy worked. You can see I ran from the end of May 2020 to the end of May 2022. So it's a 2-year test, and you can see there's a variety of different bar sizes and markets where it worked. Altogether, I'm only showing you a handful of them. There were actually 133 different combinations of the two that worked. So it worked in quite a few different areas. Of course, that's only a 2-year test. That's not the final test. That's just a preliminary test. And that's part of the process I use to build systems. The final test is running through walk forward testing, which is a method of out of sample testing. Here's just a couple of the results. Here's copper, 240 minute bars. You can see it looks pretty good. There was a couple significant drawdowns. Every good system will have drawdowns. If they don't have any drawdowns, you got to watch out because they might just be over optimized systems. But this is all out of sample, so that looks pretty good. And then here's one with not Kansas City wheat. It's coffee, KC. I saw KC and I thought Kansas City. KW would be Kansas City wheat. That's hard red winter wheat. But this is coffee, and it's on the ICE exchange, 120 minutes. You can see it doesn't necessarily trade all that often, but what it's doing is it's getting in, getting its profit, and getting out. So there's a lot of flat periods, and that kind of indicates that it's not in the market all the time, which if you're going to have a diversified portfolio, that's not bad to have some markets that just sit and wait. And when the opportunity arises, they get in, they get their profit, and they get out. Other systems you'll want to have in a lot of the time to catch the bigger trends, but it's not something you need on all your systems. So that's coffee, works pretty well. Of course, even with those walk forward curves, those aren't fully tested strategies yet. There's some other steps that I do as part of my process to make sure those are good strategies. Now, if it works in the current market in multiple situations like this did, there's some robustness. So that kind of shows that the idea is pretty good and that you might get some good strategies out of this simple idea. But of course, you always want to test it for yourself to verify. Don't rely on just what I say. Test it for yourself and see what you get. Okay, if you like this video, please give it a thumbs up. I'll make more, and I'll give you more algo strategies that you can use. Leave a comment. Let me know what you think, good or bad. I reply to all comments. And hit the subscribe button. That'll keep me making more videos too. I'm Champion Trader Kevin Davey. Have a great day.